Okay, Bismillahirrahmanirrahim. This is Aamir Ullah. I'll be teaching international finance as a course in this semester. This is week number first, and we'll be discussing the basics of the international finance. First of all, coming to definition, international finance, what it is, actually it is the study of monetary interactions between two or more countries. Now, you see in the very beginning, it is the interaction between two or more countries. And for what? For focusing on areas such as FDI, foreign direct investment, and currency exchange rates. You see, international finance, it mainly focuses on the monetary interactions, means the interactions in the currencies, right? And which we have broadly two areas. One is the foreign direct investment, and the other one is currency exchange rates. So international finance mainly deals in these two things, the foreign direct investment and currency exchange rates. Now, foreign direct investment, what it is, for example, we have a company with the name A, say it invests, it is a Pakistani company, and the head office of this company, the company A, is in Pakistan. She wishes to open a branch in the USA. When she decides of investing, or she invests in the open up a branch in the USA, so this is called the foreign direct investment. Or another example, we have Nestle. It is the head office or the head branch, the main office of the Nestle. It is in the Switzerland, but we have branches of Nestle in Pakistan as well. So these are the examples of the foreign direct investment. The company comes and directly invests in the foreign countries. In the currency exchanges, we mainly focus on the imports and the exports, which we will be discussing in detail in the coming lectures. Moving to next slide, we have the currency. What it is, actually, it's the money in the form of paper or in the form of coins, usually issued by government and generally accepted as its face value as a method of payment. Now, currency, in this time, we may be having a digital currency, right? In Pakistan, we have the currency in the form of paper or in the form of coins. It is mainly issued by the government. Now, what do you mean by here? Each and every country has its own bank, state bank. And we have in Pakistan, State Bank Pakistan. It is a regulatory bank, a regulatory body, which regulates the currency in Pakistan, right? It is the State Bank of Pakistan which regulates. And generally accepted at its face value as a method of payment. Say we have many notes of the currency, and on each note, the value is mentioned. 10 rupee note, 20 rupees note, 50 rupees note, 100 rupees note, and 500,000, 5,000 notes we have. So the value of that currency is mentioned on the face of the and on the face of it, right? So what a currency is, it's money, right? In the form of paper, it might be in the form of paper or in the form of coins, and issued by the regulatory body, that is the State Bank. In Pakistan, we have the State Bank of Pakistan, and it is generally accepted at its face value. For example, if you want to buy a dollar marker, it costs almost 20 rupees. So you need to give a note of 20 rupees, right? Moving forward, we have another term in the first week of the contents of the international relations, international finance, that is the interest rates. You might have heard this word many times. The interest rate is the amount a lender charges for the use of assets expressed as a percentage of the principal. You see, when you want to forward or to lend money to the borrower, you will be called the lender, and the one who receives it will be called the borrower. Now, the lender has the authority to charge interest on the principal amount. Say if he or she gives you $100 or $10, and he or she says that I'll be charging, say, 10% interest rate, and he or she lends this amount for a year, and 10% with 10% interest rate. So at the end of the year, you will have to give $100 plus, $10 and plus $1 as interest. Now the rate of the interest varies, means it changes. And what is the benchmark? A loan that is considered low risk by the lender will have lower interest rate. You see, the lower the risk, the lower the interest rate, and the higher the risk, the higher the interest rate. So a loan that is considered low risk by a lender will have a lower interest rate. And a loan that is considered high risk will have a higher interest rate. It depends. You see, even in the banks in Pakistan, when they are there to forward a loan, they do analysis. They do scrutinize that the borrower is in what condition. Will he or she be able to return that amount on time or not? If the bank thinks that yes, he or she is able enough to return the amount that will be forwarding to him or her on time, so they do analyze the situation and forward that amount or loan on a lower interest rate. Another case, if a person after analyzation of the bank, he or she is declared as a high risk borrower, so they charge a very high interest rates. So the higher the risk, the higher the interest rate, and the lower the risk, the lower the interest rate. Moving forward, we have another term used in the international finance and the course contents, that is tax. What it is, a tax is the cost of living in a civilized society that people have to pay for economic development and planning. Tax is not a new term, it's not a new phenomenon. In the very early days, almost back in the history, almost 100,000 years back, the tax has been collected by the different governments. Even in the past, they used to collect taxes from the people, because what was the reason? The reason was that the governments, they were in need of to control their territories, to protect their people, to to do businesses with other people or other countries, and for that they need to develop a protective society. And for that, the first thing was to have fund, because the people who will be responsible for having a good say society, a protective society, they need fund and they need to hire people for that, just like we have in the past, even in the recent era, or now most of the fund is utilized on the military. And almost in developed countries, and developing countries, and underdeveloped countries, most of the fund is located for the military. And the main purpose is that they are responsible for protection of the frontiers, borders. And when your borders are protected, you can have economic activities within that territories, within that area. And when the economic activities are going well, you will generate profit, and on profit you will have to pay taxes. So what a tax is, it is the cost of living in a civilized society that people have to pay for economic development and planning. It is the realization of money in the country, tax levied by the government on goods, firms, individuals, and societies. So taxes are imposed on the goods, the firms, means corporations, companies, on individuals as well, just like we do teach in this university. So we are paid and we give taxes, and societies as well. Moving forward, direct, and you see the taxes can broadly be divided into two. The one is direct, and the other one is called the indirect taxes. You see, the direct taxes include salaries, interest on securities, income from property, and income from business, whereas indirect taxes include sales taxes. You see, one tax is collected directly from, say, the salary, just like we have in university, we pay direct taxes to the government. Interest on securities, if you have, say, bond, you have purchased a bond and you got profit on that, you will have to directly pay tax. You have a property, right? The price of the property rises, your profit rises, and you will have to pay taxes directly. Income from business, you do sell different things, and then you will have to pay direct taxes. Indirect taxes include sales tax. You see, once the taxes are paid by the corporations, say if there is a firm who sells dollars marker, the firms also gives the tax, right, directly to the government. But when we are purchasing from retailer shops, we pay indirect taxes for that marker as well. In Pakistan, it is quite unfortunate that only 5% of people they are paying taxes. And you see, when 5% are paying taxes, 95% are just living on the cost of 5% of people who are paying taxes. It is quite unfortunate. We as a nation should pay taxes. Taxes are important each and in every country, even in the developed countries. Majority of the people, you see, if you do a survey and check it out, if you search it out, that those countries where individuals in a high percent pay tax, they will be very happy. Even in USA, you can see, even in China and UK, Canada, Australia, France, Germany, Russia. If you check it out, majority of the people, they do pay tax, and on that taxes, the government and the country is run. That's all for today. If you have any question or query, you can just text me, or you can email me. Thank you.